Hello, everybody, and we're back with another program of financial literacy, part of the CARES Act of Más Fuertes. Today, we are here with Charles Harris from Partnership for Acceleration to talk about some credit concepts. So, just a little introduction of, once again, what is Más Fuertes? Uh, Let me bring it up. Here is Más Fuertes today, brought to you by North Shore Bank and also, as I mentioned, Charles Harris from Partnership for Acceleration. So your moderator, I'm Miguel Villafuerte. I'm the Marketing and Membership Coordinator for LEN, for Latino Entrepreneur Network, one of two organizations in Más Fuertes, as well as I'm a student at UW-Milwaukee. So before we begin, the Más Fuertes program would like to say thank you to some of the organizations and companies that have supported us throughout this Más Fuertes program: the Greater Milwaukee Foundation, Milwaukee County COVID-19 Fund, American Family Insurance, Associated Bank, CIBC, and the North Shore Bank. So one of the two organizations that are making up Más Fuertes is the Latino Chamber of Commerce of Southeastern Wisconsin. And the mission of the chamber is to foster the economic development of Wisconsin by advocating, strengthening, and promoting the growth and development of Latino and other minority and emerging enterprises with the goals of providing increased access to capital, business opportunities, job creation, and capacity building programs. So if you're interested in finding out more about the chamber, here I have a few links. I have a link to the Facebook page, the YouTube channel, LinkedIn page, as well as the chamber website, as well as I have a phone number where you could reach somebody from the chamber, 414-888-2270, as well as an email where you can send different emails to about grants or classes to membership@latinochambersew.org. So the other organization is the Latino Entrepreneur Network of Southeastern Wisconsin, LEN. The mission of LEN is to promote entrepreneur awareness and education through bilingual coaching, professional development, and networking. And so here are some different sources, some different links to find out more information about LEN. There's the website, Facebook page, LinkedIn page, Instagram account, and the same number can bring you to somebody from LEN as well. And if you are interested in emailing somebody from LEN, you can email info@lenwisconsin.org. So we'll have another program similar to this one on Friday. This coming Friday, the 22nd of January, it will be about buying a house during the pandemic. It will be in Spanish, as well as we have the same topic covered, buying a house during the pandemic. It will be on the 26th of January. So now introducing our presenter for today, Charles Harris from Partnership for Acceleration. Thank you for coming, Charles. If you want to just give us a quick introduction about yourself.
Sure. Well, for the last 15 years, I've worked in the credit and finance area, helping individuals to improve their credit so they could qualify for a mortgage. And then because the company I worked for also had a commercial division, we focused on business owners to help them get their scores up so that they could get financing to start, grow, or save their business. So over the last 15 years, I've looked at a lot of bad credit reports. I've looked at a lot of weak financials. And that led me to start my company, Partnership for Acceleration, to help. That was a coaching opportunity to help people understand what they need to do to get their loans approved, to what they need to do to get the financing to start, grow, or save their business. So as a former business owner myself, or I'm still a business owner, but I have owned some larger businesses and learned a lot over the process, a lot from failing actually, because in my history, I actually lost $1 million of my own money by things that I didn't know, things that I was doing that I shouldn't have been doing, and things that I could have been doing that I wasn't. And so that has become the battle cry of my effort here, to help people know what they don't know about credit, to help people stop doing the things that they're doing that are hurting them, and then to start doing the things that they could be doing, but they have no idea what they are, because credit is a game and financing is a game. And not everybody knows the rules of those games. And when you know the rules, you can play the game to win. And when you don't know the rules, you kind of get your head handed to you. That happened to me. That's how I learned so much. And now what I decided to do for the rest of my life, as long as I have breath in my body, is to share what I've learned, because I did get the $1 million back. I did learn an awful lot from the experience. I wouldn't wish it on anybody, but now in my old age, I've promised God that I'm not going to quit. I'm going to keep going until he stops me. And so every opportunity I have to share with business owners the things that they need to know, the things that they need to stop doing, and the things that they could start doing. And certainly this all applies to credit, which we'll get into in a minute. But I guess before that, we're going to start with a video.
The video, sorry about that. Just wanted to make sure audio works. Okay, so here we are.
If you're a business owner that has been turned down for financing and you're stuck, unable to get the money to start, grow, or save your business, we've developed a plan at Credit Matters that can help you negotiate the activities that you need to engage in to get that money sooner rather than wait and hope things work out for the best. This program that we've developed, the Quick Start Loan Approval Program, is designed to help business owners get the money they need to start a business or grow their business or save their business. Meaning, if you've been turned down by a bank for a loan, what are you going to do? This program helps you understand how the banks look at your numbers, what you need to do to change those numbers to get them in line with what the banks need, and accelerates the road to approval. It raises the probability that you will get approved. That's worth a lot because you get the money sooner, you save your business sooner, you grow your business sooner, or you start another business sooner. My name's Chuck Harris, and I'm a credit and finance specialist. I've worked for the last 13, 14 years helping people fix their credit so they could get financed. One of the things I hear from clients all the time is those darn bankers. They only want to lend money to people who don't need it. And I say every time, bingo, you got it. Make your financials look like you don't need the money. So what banks want to see is a record of financial performance. I always like to tell people that banks drive their car looking in the rearview mirror. They don't care how great you say things are going to be in the future. They look at the last 2 years to see what's happened in the last 2 years, and that's how they make their decisions. Banks only care about one thing. If they lend you money, will you pay it back? So QSLAP helps you to get your financial act together before you go to the bank, so that when you go there, you know your numbers meet the guidelines that the bank has for approval. You know that your financial ratios are what they're looking for, and you know that they're going to get approved. So what the Quick Start loan process is helping business borrowers to understand how banks process their information, how they interpret those financials. Secondly, identifying things that you might be doing that you shouldn't be doing and they aren't helping you to get approved, so you should stop doing them, obviously. And thirdly, taking some action to do things that you maybe haven't thought about that will cause the bank to look at you more favorably. That's why the first step for us is to do an assessment where we look at the financials, the same ones the bank looks at, so that we can see where you're strong or where you're missing something that needs to be mitigated. If your business needs that, then I can help you. But I'm an old guy, so like I tell them, I can help you. You just have to call me while I'm still breathing. When we're at the end and you have met all the guidelines that we know that need to be met, you will get the loan. So what a great feeling to know before you go to the bank that you're going to be approved. Okay, so the question you're probably asking is, will this work for me? Well, the main problem that business owners face is that they are not financially aware. They don't know how the bank processes the information that they've given. So they take their documents to the bank, or they send them to the bank, and then they hope and pray that they'll get approved. With our system, you can go to the bank knowing you're going to get approved. There's a big difference there. So that's the goal of the QSLAP program, is to help you be aware of what the banks are looking at, understand where you are, where your financials either fit or miss the guidelines of the bank, and then to develop a plan of action to help you address the areas where you're missing the boat. So if you're a business owner who's stuck, burned out, worn out, tired out, frustrated, working way too hard for the money you make. It should be obvious to you that if nothing changes, nothing changes. So if it's even just to have a conversation about your situation and something we can say or do or introduce you to that helps you get from where you are to where you need to be, I wish you'd just call that number on the screen. It comes direct to me. Be happy to talk with you. No cost, no obligation, to share with you the details of this program and how it can help you, whether you're looking to start, grow, or save your business. We can help. You just have to call while I'm still breathing.
All right, so an amazing introduction video. So you're ready to just jump right into the presentation?
We'll just jump right in. Okay.
All right.
Our topic tonight is credit, one of the 5 C's. There are 5 C's that banks look at in determining whether or not you would qualify for a loan. So what we're going to talk about is the first C, which is called character. Character asks the question, if we lend you money, will you pay it back? And how they're going to know that, we'll talk about in a second, but you need to understand, okay, you can go to the next slide. Here are the ways that your credit can affect you. And this is about dollars. I have a little story that I tell every one of my coaching clients. If I give you $1 and you can double that dollar 20 times before you retire, do you know that that dollar, after you've doubled it 20 times, will turn into $1,070,000? $1,070,000 by doubling it twice, or doubling it 20 times. So it matters when you let dollars slip through your hands because you're paying too high of an interest rate, or you're doing something else in your business that's causing money to drain off of drain into the expense category instead of saving it so that it can grow and become part of the $1 million that you're going to need if you're going to retire and have money take care of you. That my clients also hear me say, when money makes money, the money makes more money. That's just compound interest. Well, what we want is to get you saving money by not having to pay a high interest rate. Use that money to grow and compound so that you have money working later on in your life, so that when you're an old guy like me, you don't have to be working. I work because I want to. I love what I do. I love to help people learn the things that they don't know. Or as Miguel at North Shore is so devoted to teaching and preaching financial literacy. And so I really applaud him for that. I'm honored to help and be available to the bank anytime they'll get me in front of people. I'm happy to talk to people about what they can do to save money that can grow and wind up being part of their financial legacy that will take care of them and their family through the years while they're working and after they retire. But just look at your interest rate. If you have a low credit score, your interest rates are going to be higher. The loan to value, meaning the portion of the loan that a project they're going to lend you is going to be lower because you're afraid to take the risk of lending you more. It'll cost more to lease, and your insurance rates go up. So those are all things that take dollars off the table, and that those are dollars that can't work for you. So the value of fixing your credit, and you go to the next slide, we'll show what that actually means in dollars and cents. Now, this was done some years ago, and the interest rates have changed. They're lower than they are. They're lower than this now, but the principle is the same. If you look at what a $100,000 mortgage will cost over 30 years, and then look at what those costs are, depending on what your credit score is. If you're at 620, your interest rate could be 7% instead of 5%. Well, today we have mortgage financing rates that are down in the 3% range, but commercial rates are still going to be around that 5% number. So let's talk about business financing. So the savings per month, look at the monthly payment on that principal and interest on that $100,000 loan. $537 a month if you have a 740 credit score, $665 if you have if you have a 620 credit score, that's $128 a month. You only need $1 to double 20 times to have $1 million at the end of the 20 doublings. So if you let $128 a month slip through your fingers, you're missing a huge opportunity to have that money grow over time and really grow into a sum of money that can do you a lot of good. It can help you grow your business. It can help buy a new home. It can help buy a new equipment for your business, whatever it is. Now look at the bottom line at how much that loan costs over how much your payments are over 30 years at a score of 740 or 193, and at 620 they're 239. Well, that's $45,000 that could be in your pocket. So the reason for fixing your credit is to save you money in the short term so that you can invest it and grow it and have money taking care of you in the long term. So let's look at the next slide. Those are the credit reporting agencies, and there are 3 of them. And they're separate companies: TransUnion, Equifax, and Experian. Those are 3 credit monitoring companies or credit reporting companies. They're separate companies. And the reason when you go to have your credit check that you have 3 different scores is because there are 3 different companies, and not every creditor reports to all 3 of the bureaus. So you'll have some things showing on TransUnion that are not showing on Equifax. You'll have things showing on Experian that may not be showing on TransUnion, but for the most part, TransUnion and Equifax are pretty close. But look at that next slide. 30% of credit reports contain errors that are serious errors that can result in the denial of credit. So getting those errors corrected, getting derogatory information like late payments, charge-offs, getting those removed plays a big part in having your score be high enough so you can get the lower interest rate. And remember that once a derogatory is on your report, it stays there for 7 years from the date of last activity. I mean, the last date that you made a payment on it, that's the date of last activity. So 7 years is a long time. And if you're in a business and you want to start that business, start a new business, or you want to grow the business you don't have a lot of time. And most people don't want to wait 7 years for something to fall off their credit report, which is why the credit repair industry developed so that we can legally challenge the derogatory information on your credit report. And there's a piece of legislation called the Fair Credit Reporting Act. It was first released in 1970. It's been amended several times. But the most important thing about the Fair Credit Reporting Act is it requires creditors to verify what they're saying about you after they've been challenged. So what we do, we take every derogatory on your credit report. Derogatory meaning a late payment, a charge-off, a judgment, a collection, a bankruptcy, anything that's negative, and we dispute it for you. Now you have the right, as in a court of law, even if you run the stoplight, you have the right to go into the court of law and say, I didn't run that stoplight. You're innocent until proven guilty based on our court system. With credit, you're guilty of whatever's on your credit report until you prove that that it's not true. So with a legal matter, the court has to prove that you're guilty. Your accuser has to prove you're guilty. In the credit world, you have to prove that you're not guilty. That's why we exist, to be able to take that derogatory information, challenge the credit bureaus by saying, Miguel did not run the stop sign. Miguel did not make this late payment. Now, even though you made it, you have to understand it is your right by law to proclaim your innocence. That's what we do. We become your advocate to say, Miguel was not late on this payment, and then becomes, based on the Fair Credit Reporting Act of 1970, now it becomes their obligation to prove that you did it. So until that point, it's your responsibility. Our disputing this for you makes it their responsibility. And then the law says that they have 30 days to verify that what they said about you is true. Now, a lot of people have collections on their credit reports, which indicate that you've been at least 90 days late in making a payment. That's a serious delinquency. So when we tell the credit company or the credit collection company that this is not yours, they now by law have to prove that it is. So they have to verify it and then send that verification to the credit bureaus. And the law says this has to be done in 30 days. If they miss the 30-day window, the law also says that item, that derogatory item, that late payment, that collection, that bankruptcy, whatever it is that we have challenged where they have failed to verify, the law states that that has to come off your credit report. So the reason we get 40 to 60% of derogatory information removed from a credit report is because they don't verify in a timely fashion. And collections, if you have collections on your credit report, they're the easiest thing to get removed because credit collection companies are the worst at verifying the information. I happen to be a part owner of a debt collection company, so I know this side of the street pretty well. I can tell you that credit collection companies are not really good at verifying. So the odds that the collections are going to come off are really pretty high, pretty favorable. Not guaranteed, but you play the odds when you've got all of this bad stuff on your credit report. And when you play the odds, when you play the game to win, knowing that that law requires the creditor to verify within 30 days, and if they don't, you get a free pass, a free ticket out of jail, because that collection then will be removed from your credit report. When one of those comes onto your credit report, you get dinged for points. If you had great credit, we'll see that slide next, but just hang on a minute. 850 is the highest credit score you can get. And if you had perfect credit and you had one late payment come on that perfect credit report, you could lose 100 points just from one late payment. If you have marginal credit, like 650, which would tell us that you've made multiple late payments or had multiple payments late, and you miss another payment, your score doesn't go down by 100 points because you've already been dinged so many times. But if you have good credit and you miss one payment, it could cost you 75 to 100 points. So this is a big deal because 75 to 100 points will get you financed most of the time. You don't want to lose 100 points. All right, let's look at the next slide. Fair Isaac Corporation is the company that was formed in, I think in the late 50s, that keeps track of this. They're the ones that come up with what they're called algorithms, the formulas that determine how a credit report will be construed to reflect the credit worthiness of a borrower. And here's the important thing to remember. You can go online and pull your credit. That's an informational credit score only. It's not related to borrowing money. So the scores you get online are always going to be higher. I'm sorry. Yeah, they're going to be higher than when the bank pulls them. Because when the bank pulls it, it's related to a request for money, which increases a risk to the lender. So if you look online and you see your score is 720, when the bank actually pulls your credit, you could be more like 675. So this is why watching your credit and seeing what's on it is probably one of the first things you can do. You can go to a place called annualcreditreport.com, enter your financial information, name, address, social security number, date of birth, stuff like that. And you can get a copy of your credit report free of charge. And you'll see what they're saying about you. And when they're saying things that aren't, 30% of the stuff on there for some people it's not even theirs. I've had people with the same last name, a social security number that's one or two digits different than another. They both wind up on the same credit report. So these errors, it's important to avoid the errors, and it's important to see what's on your credit report. So one of the first things you can do is pull your own credit report and look at it and see what's on there and see if you can identify those things as being yours. If you have trouble reading the credit report, I'm happy to help you. You just have to call me, or I'm sure you can call North Shore Bank and they'll help you figure out what's on your credit score. There are different models. For example, if you're going to get a home mortgage, they're going to look at all three credit scores and they're going to underwrite the loan to the middle score of the weakest borrower. So if it's a husband and wife are applying for a loan and one has better credit than the other, they're going to underwrite the loan and give you the rate based on the middle score of the weakest borrower. Now, in commercial financing, they use only one score. Whatever it is, it is. But if you're going for a mortgage, you've got to be aware that it's the middle score that they're going to count. They're going to throw out the high one, they're going to throw out the low one, they're going to underwrite to the middle one. The other thing you should know is, let's say it's a Saturday afternoon, and yesterday you applied for a mortgage. You went to Miguel, you went to get your mortgage, and so they pulled your credit, and they got a credit score. Next day you go look, you're looking for a car, and they pull your credit to buy a car. And then you also go to Kohl's or you go into an apartment store and they offer you a 20% discount if you apply for the credit card. So now you do that. I just did that recently, and never had a Kohl's credit card, but they offered 20%. My wife had a basket full of stuff, so I thought, okay, we'll do this. Every one of those scores will be different because there are different risk models for mortgages, for auto loans, and for installment loans, and revolving loans, different loans, because they're different risk. If you are buying a house, they know that you're going to move heaven and earth to make your payments. So they're going to, the risk model is going to be different. It's going to allow, make different considerations. Let's say you're going to go buy a car. They're going to look at it differently. They don't really care about your house payments, unless they see late payments there, but they're sure going to look to see whether you missed payments on a car loan in the past. So that's going to be weighted more heavily in the risk model when you apply for an auto loan. So just be aware that there are many scores, many risk models, and you need to know the information on your credit report. When we start fixing credit, we just tell people that we're going to get rid of 40 to 60, on average, 40 to 60% of the derogatory stuff on the credit report. I don't really care what your score is. I just care what's on the report, because I know that by challenging it, disputing it, we know that based on our track record over since 2004, we get 40 to 60% of it removed. I've had many clients, not many, but a number of clients where we've gotten everything removed. No, I'm sorry, where we've gotten 80% removed. I've had a couple of clients, we got everything removed. That's not the norm. Plan on 40 to 60%, 40 to 60% of the bad stuff off of your credit report will probably cause an increase in your score of 50 to 100 points. And if you're in the low sixes, 50 points will get you into the range where you can get financed. So that's a little bit about the Fair Isaac Corporation. That's where the FICO score comes. Banks look at FICO scores. There's a score called Advantage. Advantage does not look at medical debt. So you may have medical debt. It's not going to count against your score if you're looking at a Vantage score online. So just be aware that it's kind of it's a maze, and you need to know what those creditors are saying about you. And if it's negative, you need to confirm that, yes, I really did miss that payment last April or whatever it was. Yes, that car did get repossessed. Yes, I do have that collection, or yes, I did go bankrupt 3 years ago, whatever. Just remember, the bad stuff stays on your credit report for 7 years. So as a business owner, if you need money and you don't want to wait 7 years for it, our credit cleanup service to get that scar tissue removed from your credit report could be a high payoff activity. And for the money that you will save on a mortgage, on your insurance, on your car payments, you're going to save that every single month. So paying a few $100s to get your credit fixed is probably one of the best investments any business owner or consumer can make. Let's look at the next slide. There's the range. Scores range between 300 and 850. I've never seen an 850. I've never seen a 300. I've seen 830 and I've seen 350, but I've never seen 300 or 850. Remember what the credit score says. It's a numerical indication of whether you make your payments on time and whether you use credit responsibly. And we'll see some slides that talk about that in more greater detail. But just be aware that that's the range, the FICO range between 300 and 850. As a business, I mean, we have a lot of business owners on the call tonight. So you just need to know that you need a minimum score of 680 or you're not going to get financed at the bank. And you may not get financed at 680, but 680 is generally the cutoff point if you're going for commercial financing. You can get a mortgage probably for 640 at 640 because the risk that you're going to leave your house is less than the risk that your business is going to fail. So that's why this is kind of, these numbers are all over the place, but I'm trying to give you a little background so that you understand the maze. And if you need any help figuring it out, well, that's why I'm here. Always happy to hear from you. All right, let's look at the next one. So what's in that credit report? You can see the personal information that's there. Now, you want to check to make sure that that your social security number is reporting correctly, that your birth date is correct, that your address is correct. I've seen mistakes in every one of these areas, and that causes other people's information to get onto your credit report. And that's fine if they have good credit and you don't, then your credit report is going to be helped by other people's information being on there. But there are a lot of people with bad credit, and particularly in the Hispanic community, there are a lot of people that have similar last names. So I've seen that a lot. And so you really want to know what's on that credit report and be sure that it's yours. So you're going to see trade lines. Those are the accounts that you opened or closed over the years. You want to look at those accounts to see if, is that really mine? Because there could be reports or trade lines that have gotten on with late payments that were not yours, just somebody with a social security number that's close to yours. And I'll tell you something, when the credit reporting agencies pull your credit or pull your file, they don't look at your birth date. They look at the month and the year you were born. And so they don't check all 9 digits of your social security number. They check 7 of them. Well, that leaves 2 possibilities that somebody else's information that was the same as theirs, where their social security number is the same as yours, except for 2 digits. And those are the 2 digits they didn't check. Well, then somebody else's information could be on your credit report. That's your privileged private information. It's worth your time and effort to pull your credit report and look to make sure that it's yours. You can do that. You can do that. And then check to see if those collections, bankruptcies, judgments, tax liens, and late payments are actually yours. Are they yours? If they are, they are. We'll work on getting them removed. But you don't want to be paying to get somebody else's stuff removed. Well, you do have to pay to get it removed, but you don't want somebody else's credit history impacting your report. We can move on to the next slide. Okay, your payment history. This is a big deal. 50% of your credit score is derived from your payment history. To get the best score possible, you need to have made your payments on time, and you need to have at least 5 accounts reporting positively. 5 open accounts reporting positively. And they should be a mix of accounts. A mortgage account is one type. That's a mortgage account. An auto loan would be an installment account. And then credit cards would be revolving accounts. You need to have a mix of those. So you don't want all 5 of one kind. So there they are, auto loans, credit cards, mortgage loans. Those are the different types of credit you can have. And the algorithm that scores your information likes to see all three types of loans on your credit report. And then, of course, the negative accounts, the ones that show delinquencies or late payments, collections, judgments. Those are the ones that we work hard to get off of the credit report. And here's the thing. Let's take collections. Let's say you owe a medical collection and it's $1,000. And you haven't paid it because you don't have the money, or you don't think it's yours, or the insurance company should have paid it, but they didn't. So you have the option of paying off that collection, but that doesn't make it leave, that doesn't get it off your credit report. It just will show that the collection was paid, and the bank is going to see that you still had the collection. So if in the case of that guy that lost 100 points because of one late payment, let's say it was one collection. If he lost 100 points and he pays it off, he'll get 20 points back, but he's still going to be 80 points in the hole because the collection is still showing on his credit report. That's why having us get it removed, you'll get back all 100 points. So when you get all the points back on multiple collections that we get deleted because of our dispute process, you get a lot of points back fast. So it takes about 4 to 6 months for us to do enough dispute cycles to get 40 to 60% of your derogatory stuff removed. But we have, I calculated recently that since 2004, we have between businesses and business financing and mortgages, we've cleared the path for people to get about $2 billion in financing that they couldn't qualify for when they met us. So this stuff really helps. Next slide. Okay, this said maintain 4 open accounts. I can tell you it's up to 5. So remember, I said that already. The mix of account matters. New debt counts less than old debt. They like to see that you have a deep history, that you've made payments for a long time. That helps you. So there again, looking at your credit report will tell you whether these accounts are reporting on all 3 of the bureaus, and whether you have a nice mix, whether there's something on there that isn't yours, whether they made a mistake with some of your information. I also have people go through their credit report and check off the things that don't match who you are. Did you ever live? They'll list all the addresses where you ever lived. And a lot of times, the people that I'm talking to never lived at the addresses that are showing in their credit report. So then we challenge that, say, prove that we lived there. And when they can't prove that you lived there, it comes off your credit report. So we wind up cleaning up or scrubbing or get rid of the scar tissue that can overload your credit report, your history, your report card with information that is either negative, wrong, or outdated. Get rid of that stuff and your score goes up. Next slide. Debt utilization ratio. Of the credit that's available to you, how much are you using? Now, one of the things that I've heard a whole bunch of times over my years in this business are those damn bankers. They only want to lend money to people who don't need it. And I say, you're right, you've got it. That's exactly who they want to lend money to, because those are the people who make their payments on time. Those are the people who have money in reserve. The bank is not taking a huge risk to borrow to somebody who doesn't need the money. So I'm going to show you now how you can look like you don't need the money. Make your payments on time. People who don't need the money make their payments on time. So you may not have all that much money, but if you make your payments on time, every single one, you'll look like somebody who doesn't need the money. Now, this slide talks about utilization ratio. Of all the credits that's available to you, how much are you using? Banks would like, the credit bureaus want to see you using no more than 30% of the credit that's available to you. So let's say you've got 6 credit cards, and each one of them has a credit limit on it of $1,000. That would give you $6,000 in available revolving credit. 30% of $6,000 is $1,800. As soon as your outstanding balances on all your cards exceeds 30% or $1,800, you start to lose points off of your score. And when you get above 70% utilization, you lose a lot of points off your score. So one of the fastest ways to get your score up is to pay your credit cards down and keep them below 30%. Now you can have one maxed out and one at zero, as long as the total of outstanding indebtedness does not exceed 30% of your total credit limit, you'll get the maximum score. Now that's probably something you didn't know before we started, so that falls into the category of things you didn't know. Now that you know that, you can help yourself by keeping your credit score, keeping your outstanding debt below 30%. Now, here's a point that real estate investors and businessmen want to know. If you're not going to buy anything, if you're not going to buy a house, you're not going to buy a car, you're not going to refinance your mortgage, you don't have to care if it's 30%. You only have to get it down to 30% before you go apply for credit to buy something or refinance something. I once had a guy came to me for credit report. This is at least 10 years ago. And his debt utilization ratio was high. Well, the reason it was high, he was a contractor, and he bought houses and he fixed them up and sold them. And he had at that time, he was able to buy a property on 68th and Blue Mound, pretty nice neighborhood, for $13,000 from a bank that wanted to get rid of it. They had repossessed it. There was nothing wrong with this house. It didn't need any fixing up. The bank just wanted to unload it from their real estate owned portfolio. And they sold it for what the outstanding debt was, and he needed a credit card to pay it. He gave him a credit card and bought the house. And he maxed out his cards, maxed out that card anyway. It threw his debt utilization ratio high, and his score went down. And I tell people, I'm in this business. I'd blow my credit score up any day of the week that I could buy a $150,000 house for $13,000 on a credit card. It didn't need any fixing. He rented it out the same month that he bought it. It closed on it. Got $800 a month in rent for it. That's 10 years ago. Made the credit card payments with the rent payments and refinanced it in 6 months. And then he was able to get his money back to pay off the credit card, plus any additional equity that he took out at the time, because at that point he could have taken out up to 80% of the equity. So anyway, 30%, remember the 30%. 80% of your credit score is a combination of just two things: an on-time payment history and keeping your debt utilization below 30%. You do those two things right, and you're going to have 80% of the possible score so 80% of that 850. So that 850 top credit score. So you don't need to pay for credit repair if you can pay down your credit cards. And understand that they need to be paid down to 30% of the outstanding balance, or outstanding of 30%. The outstanding balance can be no more than 30% of the total credit available to you. If you look at that next point, closing accounts with high credit limits will increase your utilization ratio. So I tell people never close an account. Keep them open. You don't have to use them, or use them every now and then. Buy a tank of gas, pay it off, because those older credit cards contribute to your credit score. The mix of accounts you have makes up 15% of your score, which is not a lot, but if the bank needs you at 740 to give you a 2.75 interest rate on a mortgage, and closing a credit card that's 15 years old gets you below 740, you won't get the best interest rate. So this is not all about fixing credit so you can get a loan. This is fixing credit and keeping it solid so you can get the best deal that the bank offers. We have some people who stay with Credit Matters continually just to make sure that they never have a derogatory that doesn't get addressed, because these are investors that are going to buy a house, and when they buy it, they want to be able to get the lowest rate. So they figure that $29 a month is not too much to pay to just continue this forever, so that any time that something negative comes onto their credit report, it gets dealt with. So that's just, we have some people that do that. Okay, let's go on to the next one. Next slide. Okay, inquiries. Here's the thing about inquiries. When you look at a credit report, it's going to say you have too many inquiries. Inquiries don't matter a whole lot. They're on there, but, and you'll get denied for some credit cards because you've had too many inquiries. But for the most part, the inquiries stay on your report for 2 years, but the points that they cost you, which can be anywhere from 10 to 15 points per inquiry, those come off within 6 months. So the inquiries are going to stay printed on your report, but the negative effect of the points that you lost when those inquiries were initiated come off within 6 months. And then a soft pull, like you pulling your own credit at annualcreditreport.com, that has no negative effect on your report at all. Okay, next one. Okay, there's the benefit of credit restoration. Removing inaccurate and unverifiable items from the credit report causes your scores to go up. I say 4 to 6 months, not 3 to 6 months, to get 40 to 60% of the adverse items off, and your scores will go up 50 to 100 points. So this is a little different than the numbers that I use, but that's the principle. And you don't have a choice. Either you sit and wait 6 months, or you wait 7 years for it to die of old age, or you get proactive and use the rights that you are allowed to challenge it, make the credit bureaus report or verify what they're saying about you. And if they don't do it, you get a get out of jail free card, and those items get deleted from your credit report. So this education part that I do a lot of with my clients is to help them understand how this works so that they never get into the situation again. I once had a guy saying, well, I only missed a cell phone bill, and I just figured I'd pay double next month. He had no thought that that was being reported negatively on his credit report. He was blown away when he saw it. Make your payments on time, use credit responsibly by using no more than 30%, and you will have a respectable credit score. Next slide. There you go. You already know this because I told you. Remember, it's reported by law and it has to be deleted within 30 days. And when they fail to do it within 30 days, it has to come off, and that helps you. Next slide. There's the moral of the story. Deleted items cause your scores to go up immediately. Pay down your credit report, pay down your credit cards, your scores will go up the next month. Same with getting items deleted. So getting items deleted means you can qualify for a loan sooner than if you just wait and let those old items stay on there for 7 years. Next. Identity theft. I'm not going to go into this much because I want to touch a little bit on commercial business credit, but I just had this happen to me. I just had one of the companies that I do coaching for, called the Stuck Breakthrough Strategies platform, called me to tell me that somebody called them from Colorado saying that one of their employees, I'm not an employee, I'm an independent contractor. So my 1099 showed on QuickBooks on their tutorial for how to make out 1099s for your employees, and my social security number was on there. So Intuit mistakenly took my 1099 from last year and used it to teach people how to create 1099s from their QuickBooks account. That's a no-no in the credit business. They didn't steal my identity, but they put it out there for the world to see so that somebody can steal it. So I called my attorney, the guy that does the legal work when we have a legal issue connected with credit. And he said, well, I guess you're going to get some free money here because it's a no-no for them to do that. So anyway, it doesn't make me feel good that my Social Security, it's not out there anymore, but if the wrong person saw it, I could have identity theft. So that's another thing that could happen. So in my business coaching, I'm also telling people, I want to make you aware of the things that could happen so that you can protect yourself against them. And identity theft is one of them. So I'm going to move quickly for just a few minutes about business credit, because what we're talking about here is personal credit. When you're a business owner, it's your personal credit that's going to determine whether you get a loan or not, because you are the business. And unless you have a large business, it's probably not strong enough in terms of revenue to be able to support a loan without a personal guarantee. That's just the way it is. But it is possible for you to get credit under the name of your business, but there's a few things you need to know to do that. And we could do a whole seminar on this, but I'll just try to give you some highlights. Number one, your personal credit is based on your payment history, the type of accounts you have in your file, and how much of the credit lines you have used. With business credit, all they care about is your ability to pay. That's all they care about. So getting vendor credit is a big part of the process. I'll talk about that in a minute. Business credit scores are based only on whether the company pays its bills on time. That's it. It's called a paydex score. Approval limits for business credit are much higher than than personal credit cards. So if you're a real estate investor or you need to buy equipment or whatever, we get business credit. The loan company that I work with, that I'm a part of, it's not tough for us to get $100,000 worth of business credit cards for a company. That's easier than getting $100,000 worth of credit cards on the personal side. So the good news is, if you get the credit in your business name, it doesn't report to your personal credit report. So that means you can be borrowing money to run your business and not have it tank your personal credit score. Then you could still get your mortgage refinanced or buy a house. But to do that, you must be a separate entity. You can't be a sole proprietorship or a partnership. You have to be an S corporation or an LLC. And you must have a federal tax ID number. You can't use your Social Security number and get business credit, business credit card. You also have to have a real bricks and mortar location to get business credit. It can't be your home address and it can't be a PO box. You need a brick and mortar location. And you must have a dedicated business phone there with a listing in the 411 directory assistance. Using your cell phone will not do it. Now, I use my cell phone for my business because I want to be able to get the calls, and I'm beyond the point where I need money for anything. So I don't care about this, but you're younger than me. Everybody here is younger than me. You need that money. So make sure you have a business entity, a brick and mortar address, a business phone with a business listing that can be accessed by directory assistance. And if you can get an 800 number, that adds legitimacy to your business as far as the credit bureaus are concerned. You should have a website for your company because they're going to check that to see the legitimacy of your company. And an email address for your business, not your personal email address. So those are some things that will help you get credit in the name of your business, which does not report your personal credit score. And the other thing you need to go is you need to go to Dun & Bradstreet website and get your free DUNS number. You can't get a business credit card without a DUNS number. So, and they generate then a paydex score for you. And that's based on the accounts that you're showing to the credit bureau. And they're going to judge you based on your payment history. So those are some basics about business credit that vary from personal credit. And the other thing you have to remember is this. The Fair Credit Reporting Act governs personal credit, and the Fair Debt Collection Practices Act as well. And so personal credit is heavily regulated. Business credit is not. So you don't have the protections that you have with personal credit. So if you have questions about that, I would invite you to call that number that showed on the screen earlier. I'm sure Miguel or anybody at Miguel's our Chamber of Commerce guy. Alfredo is the guy from North Shore Bank that would be happy to help with some of these questions as well. But all you have to do is call me. Happy to talk to you. No cost, no obligation. Happy to help because I've been behind the 8 ball in my business life so many times, had my pants on fire so many times, and I've made it through. And if I can help you, I want to do the same thing so that you have a happier journey than I did. Mine has turned out well, but it wasn't fun on the way. So any way that I can help you, I'm available. I'm also available to sit down with you. If you have a business issue, I do acceleration consulting to help owners increase their cash flow and systematize their business so it will operate profitably by remote control. Because until you have a business that operates by remote control, you really don't have a business, you have a job. So I'm always happy to sit down for 1 hour, free, no cost, no obligation, to hear your story, hear what you want to do, and give you some points on how to accelerate how you can get to where you want to get. It's my gift for, it's kind of my giving back for the fact that I was in the ditch so many times in so many ways, and I made it back and learned a lot in the process. And so, like I said at the beginning, I'm going to spend the rest of my life sharing it. And I'm not asking you to become a client to do that. I just want to share it because I'm able to, and because I appreciate the entrepreneurial spirit. America is great because of its entrepreneurs, and I'm happy to help you.
Thank you very much for the information that you shared for the presentation. I can see from the way that you speak, the way that you really just share the information that you say because you can, that it really is your passion, that it's more than just a job for you. And in this short 3 or 4 months that I've been working with the Chamber and Len and working with entrepreneurs and bankers, it's really easy, or I've really been able to start and see the difference between people that take it as just a job and people that are helping the community and helping other entrepreneurs and educating others just because it's their passion. And so I can see very much that is your passion. I applaud you for that because I do think that that does make us a very strong character. I just wanted to say, because we're the president and CEO of the Chamber, Nelson Soler, did comment saying thanks for sharing your knowledge to Charles. I'm told that he is a good friend of yours that you guys have met before.
Well, I want to share one other thing. I have a statement that every one of my coaching students or clients hears me say. There is no financial payoff to doing the wrong thing perfectly. No financial payoff to doing the wrong thing perfectly. I help people to know what the right thing to do is to get them where they want to go. So it's about results. It's about getting the credit fixed so you can get the money for your business. So again, I applaud the entrepreneurial spirit. I respect you more than I could even begin to say. And so if I can help you, please call me.
Mm-hmm. If I may just add one or two things, and that is just to thank you, Mr. Harris, for being able to assist with the presentation of these 2 seminars, the one in Spanish as well as the one in English. And to all the business owners, it is critical for all of you to continue updating your information, especially if it pertains to credit-related issues. There is so much to learn. So many things changed from 1 month to the other, from 1 year to the other. So it is critical to keep on top of your credit report, information that is showing up on credit whenever you are about to request a financing or a loan from a bank. So again, thank you very much for participating on this session today, and look forward to certainly working with you in the future.
Yeah, so thank you very much to both of you, to Alfredo for the two presentations, for the presenting on Friday, as well as Mr. Harris for presenting today, for the connection with Mr. Harris. Thank you, Alfredo. Well, I want to thank the both of you from everyone from LEN and the Chamber. It's been an honor working with you. It's been a great and very educating experience, because as somebody who is just starting off making credits, I'm just starting to apply to some credit cards and starting to look at maybe buying a car. It's stuff that I can really use. And I know a lot of other students and young people in my same boat have the same situation, if they don't really know how to make sure they keep it, how to keep good credit and make sure they don't get the bad or worse credit. As well as I've seen people who have older people struggle with credit. So I know it's a very tough topic for a lot of people, that they maybe don't know everything about the concepts of credit. So I want to thank the both of you once again for this presentation, for taking time out of your days to help us and educate our community. And so once again, thank you for that. So I wanted to remind everyone, all of our viewers, that we will have another program on how to buy a house during the pandemic, or tips for buying a house during the pandemic, on this Friday at 12 p.m. It'll be in Spanish, as well as we have the English version on the 26th, January 26th, which will be a Tuesday, this following Tuesday at 6 p.m. also. Anyone who will be interested in watching this video again, it will be on our Facebook page, as well as it will be uploaded to our YouTube channel. Once again, thank you very much, Charles. Thank you very much, Alfredo, and have a great rest of your days.
Thank you, Miguel. Thank you very much.